to the rental market update. This is an interesting one. This is, I'd say, catching more headlines in Greater Vancouver in the last month or two. Just what is happening with rent. It's been talked about lots in the last couple of years that interest rates have gone up, which means investors who invest in individual rental units throughout Greater Vancouver, their monthly costs have gone up significantly, which has then resulted in rents going up quite a bit in the last couple of years throughout Greater Vancouver. And so just kind of wanted to give a quick update on the rental scenario. Are rents up comparatively to last year or down? What does vacancy look like? Who is renting? Why are landlords dropping prices? That's a clue.
A little hint.
And are investors going to come back with these interest rates dropping over the last 6 months or so?
Yeah, I think we should just kind of, I don't have the best time perception horizon, but like in the last 3 years, rental rates jumped up quite a bit.
Yeah.
I'm going to take a little bit of a wild stab. Like a typical one bedroom in New West seemed to have gone from like $1,600 a month, call it 3, 4, 5 years ago, to now $2,100, $2,200, $2,300 a month. And in some cases, in the peak of the rental madness, even a little more than that. But our investors, if you bought an investment condo today, would you cash flow? And the answer is probably not.
Yeah.
But it looks better than it did yesterday.
It looks a lot better than it did, 12 months ago. We've done podcasts on this stuff before, and it was pretty common throughout Greater Vancouver, regardless of city, really, that you were going to be probably -$700 or $800 a month on a one-bedroom condo rental when rates were in the high fives kind of range. But now we've seen a 1.25% rate drop over the last few months, and that results in approximately $70 to $75 per 100K of lending that your payment has gone down. So on a $500K mortgage, that's a drop in your monthly payment of $375, which now gets you a lot closer to cash flow, which makes these investments maybe slightly more attractive for investors who have maybe been sitting on the sidelines for a little while. And then, just running some scenarios in New West, Port Moody, Port Coquitlam, that negative cash flow today looks more in the range of negative $250 to $350 rather than $700 like it was.
Call it a one bedroom.
For your typical one bedroom kind of entry level in a newish 15-year-old or newer building.
What are the rental rates today, Denny? What are you seeing out there?
It's interesting. So, first of all, nobody does a fantastic job of documenting this stuff. There are a handful of sites who deal with rentals throughout Greater Vancouver that produce their own stats. So this is a little bit of a mix based on a few different companies that do this stuff. But in terms of like one system, like for resale, we have MLS, and MLS produces stats based on sales. And I don't know, what's the number? 99% of residential real estate sales in Greater Vancouver go through the MLS. So those stats are very accurate versus rentals. Some people use private companies to rent properties. Some people use Facebook Marketplace. Others use other sites, and it's a little bit of a mishmash. So this is some interesting data that has a lot of rental properties on it through a website that I found, but it's just kind of interesting to compare comparatively to last year. So basically, 1 bedrooms, 2 bedrooms, 3 bedrooms throughout Greater Vancouver, North Van, Burnaby, New West, Tri-Cities, are almost all less. You're renting them less today than you would have 12 months ago. So Vancouver, for example, a 1 bedroom, the average 1 bedroom rental today is $2,596, and that is down 5% from last year. If you compare to Port Moody, the average rent, a 1 bedroom rental right now is $2,377 a month. And that is down 9%. Burnaby's pretty similar at $2,321, down 10% from last year. And that is kind of across the board. It is almost all the stats are down between 5 and 12%, depending on size and location.
Yeah. I looked at kind of some specific just examples just to kind of help paint the picture a little bit, like a Yaletown 1 bedroom that's, call it 10 years old, maybe 580 square feet. Those seem to be around $2,700, $2,800 a month. That's what I see advertised. New Westminster, call it a Victoria Hill 650 square foot 1 bedroom, or a nice 580 square foot 1 bedroom in a higher tier concrete building in downtown New West or the Key. Those ones seem to be going for around 22 to 2,400. Let's call it 2,300. And the cost of one of those condos would be in the neighborhood of 500 to 550. And then, the numbers work better for one bedrooms than two bedrooms in most markets. Now, the two bedroom rental range can be wide because particularly like a market like North Vancouver. If you look at two bedroom condo stats for North Vancouver, there's a big difference renting a two bedroom in Lower Lonsdale facing the water versus anywhere else in the city. So the high end of a two bedroom rental can be quite high. But when we're talking about two bedroom rents, we're kind of talking about the more 800 square foot typical two bedroom. Might be 900 square foot in some areas, might be 750 in others. But New West, the jump to go from a one bed to a two bed might be going from 2,300 to a similar caliber two bedroom might be 500 more, 2,800, maybe 600 more, 2,900. But it's not a big jump. In some cases, it's less. Mm-hmm. And when you do the math on an extra $125,000 a mortgage, a higher strata fee, the cash flow works out marginally less.
Yeah.
So the argument to do a two bedroom rental versus a one bedroom rental, in my opinion, is if it's something that you might want to move into one day or use yourself. But if you're buying a property purely for rental purposes, I think the cash flow works much better for one bedrooms, and also tenant turnover, might work in your favor. But that might have been an ugly word years ago. But nowadays, the longer a tenant's in a place, the more likely it is to be under rent. And not that you want tenants moving out every year, but probably every 2 to 4 years would be keep you in check. And if you buy, the larger the place you get, the more likely it is to be a long-term tenant, which is okay for some people. But if you're cash flow sensitive and want the best chance of market rates, get that 500 square foot one bedroom. Those tenants are more likely to turn over every once in a while. Popular areas to rent. I think we should acknowledge in terms of the suburbs, the hot spots for rental, North Van and Brentwood seem to be standouts. I mean, Burnaby has Metrotown and Brentwood. Those are some of the highest rents in Burnaby. North Van, Lonsdale area, some of the highest rents out there. Actually, North Van's rental rates and prime North Burnaby rental rates are similar by the stats, and also from resale price points. If you're comparing, call it a central Lonsdale condo to a Brentwood condo. In the Vancouver address, I looked up what's the most expensive rental market in Vancouver and what's the least. And the most expensive, surprise, surprise, UBC West Point Grey. And I think that reflects on the price points too. And the least expensive is, let's just go with Southeast Vancouver. And South Vancouver is quite a bit slower than those prime Mount Pleasant, Commercial Drive, the prime spots where all the hipster businesses are, Denny. So, from a rent perspective, rents are down a little bit. But if you're buying a rental, I think when I look at the market dynamics of, say, Brentwood right now, phenomenal selection. If I were looking at a rental and it was strictly an investment, I think that would be one of the areas that I would look at if I wasn't too cash flow sensitive, but just wanted the balance of risk versus desirability and location, because it's in the heart of the city and very quick and easy access. Denny?
Did you say Brentwood?
Brentwood. Yeah, Brentwood.
Would you be nervous as an investor in Brentwood, though, with just how much product there is?
Yeah, from a resale point, yeah.
Because I don't know the exact number on this, but when there's new towers going up in an area like Brentwood, like Metrotown, what percentage of those purchasers are moving into the unit versus renting? Probably 50-50. Yeah.
It's surprising that it would be 50% of people buying 4 years before a place builds at $1,200 a foot moving into a place. But yeah, you're probably right. I mean, we're blindly saying 50-50. Yeah. But reality is it seems more speculative. It seems like most people buying them don't intend to move in, but some do.
Yeah.
But I guess when it comes to Brentwood, if you're buying brand new concrete high rise, that's a little more concerning. But if you're buying, say, earlier development, OMA Tandem, these are development names, by the way, that are, call it 15 years old. The value plays better. They're significantly cheaper than brand new construction. And that's probably where I would be looking, is something that's more in that 10 to 20 year range in Brentwood.
Do you think you have higher likelihood of, when tenants move out in a couple of years, higher likelihood of sitting on them for a couple months just because of the amount of supply?
By the numbers, yeah, I guess if you're kind of really overanalyzing, it's probably a safer bet to go boutique wood frame building in East Van off commercial, like Nanaimo area, than concrete jungle in Brentwood. Yeah, you're checking my answer. I'm reconsidering my answer there, Denny.
I'm just asking the questions that go through my head when I think about this stuff.
You're not wrong. I mean, Brentwood is a market that's oversaturated and has a feeling that it will continue to be oversaturated. And when I say oversaturated, I mean, it makes a lot of small condos, and it seems to make more small condos than the demand.
Yeah.
And whereas East Van is, you don't have 60-story high-rises and 50-story high-rises popping up. You have 4-story wood frames and walkable neighborhoods that, that people want to be in.
Yeah.
That's probably a little bit more resilient from a play of like resale. But, despite the macro of what's going on in Brentwood, when you see brand new, there's a very big difference between, 1,100 a square foot and 15 years older. Yeah. And I think if you buy something, like I said, that's 10 to 20 years old in Brentwood, you get the benefit of all the amenities of the area, the location proximity, and you're an affordable option compared to new construction. So you're not really competing with them.
Yeah.
But valid. I guess I'm really bought into the fact that I think North Burnaby is going to be one of the more changing, evolving markets for the better in terms of more people going there, more amenities going there. And it's just from a location standpoint with SkyTrain highway access and being just right in the middle. It's one of the most convenient places to live if you're a commuter.
Yeah.
Yeah.
It's a curious thought process, just because Brentwood specifically has Gilmore Place, which is coming up, that will have 10 towers, has the amazing Brentwood, which will have 13 towers. I think 4 or 5 of them are up now. So it's just, that intimidates me a little bit as an investor of how much more product there's going to be in 7, 8, 9, 10 years from now versus a neighborhood like a Yaletown. We talk about Yaletown investment opportunity quite a bit, just in how sluggish that market's been over the last 8 to 10 years. And it's built out. It's not like there's going to be 10 new towers there in the next 3 years versus somewhere like a Brentwood would.
Yeah, I think Brentwood caters more towards the local that was born and raised and working in the city. And Yaletown, well, it could be the same, but it could be anyone. In a scenario where Vancouver gets global attention and smoking hot again, Yaletown has more upside. Yeah. It's closer to the water. Yeah. Brentwood's just more practical for the person doing the daily grind. Yeah. On the affordable front, New Westminster comes to the forefront if it's a value play. When you're looking as a tenant where rents are a little bit cheaper, you have SkyTrain access, similar proximity to downtown, maybe a little bit further than obviously Brentwood, but closer than Surrey. So people are drawn to New West for its affordability, and that goes from buying and renting. Mm-hmm. And then it is much more affordable in Surrey. Surrey is where you go for the most bang for your buck. Mm-hmm.
On the other side of the river too, in the Tri-Cities, like New West definitely most affordable. Port Moody's kind of skyrocketed and become unaffordable for a lot of people in the last little while. And it's pretty common to see a 1-bedroom condo that's 600 square feet renting for $2,800 now versus New West, that exact same condo might be $2,200, $2,300, $2,400. But going a little bit farther east, Poco has a lot of options that are very affordable for a similar product. So that 2,700 square foot 1-bedroom $2,700 a month 1-bedroom in Port Moody, identical unit in Poco might be $2,000. Yeah. Like it's a pretty significant difference going an extra 10 minutes east.
We have a listing right now in the Trapp and Holbrook building in downtown New West. 1-bedroom, 1-bath. It's listed at $525,000. It's a nice one. It has a view, but it's a small place. It has a view of the river. And it's listed at $525,000, and I think the rent for that place would be $2,300 to $2,400, just because of the building it's in, the location it is, parking and storage. That to me is a perfect example of an investment condo that is not the bottom investment condo. It has a few features that make it more desirable. It would make it easier to attract tenants. So call it you're paying about a $25,000 premium compared to something that's facing nothing. I don't see any investors coming through the door on that one. It's all end users. So just to touch on we talked about the rental rates. We talked about how payments, the cash flow is working more in its favor. Any predictions? Anything? Any? What do you think rental rates are going to be 12 months from now? What do you think? Any predictions you have in this? in this sort of realm.
One thing I wanted to play out, and it's kind of a prediction too, is like, when do investors come back? So right now we've seen a 1.25% drop in interest rates. Your typical 3-year fixed right now is going to cost you about $500 per month for every 100K. So if you have a $500,000 mortgage on a 1-bedroom unit, your mortgage is going to be $2,500 a month, roughly. When do they come back? So right now we're playing scenarios that say your 1-bedroom condo might be negative $250 to $350 a month. Are they coming back when that's $100 a month? Are they coming back when that's cash flow neutral? Because if that's cash flow neutral, that's another 1.5% drops from Bank of Canada, which may happen next year, may happen December and through next year. So is next spring, summer when people are starting to consider investment properties again because the numbers look a little cash flow better?
I think we'll start seeing investors, because right now it's dead.
Yeah.
We call it for investors buying. I think they'll start trickling in by next summer. And I think one other thing, aside from rates and affordability, part of the deterrent with investing in real estate as a landlord right now is just the legislation changes. It went from 2 months notice to 4 months notice to 3 months notice. Because 4 months doesn't solve anything. It's more than ever a dynamic when you feel like you've rented a property, you're basically at the mercy of the tenant and you can't do much to change that. Even if you want to sell it down the road, the only way you can really get your property back is if you move into it. You can't evict a tenant to sell. You'd have to incentivize them to leave with a mutual agreement to end tenancy, which I think should be a more common tactic now than ever. If you are if you're renting out a place right now, I think it's more important to understand, one, are you okay with that tenant just living there ongoingly, or do you want to have some sort of expectation with the tenant to discuss a mutual agreement to end tenancy before signing a tenancy and getting on the same page with potentially exploring a fixed term? I don't know how the legislation will work around that. Right now you can sign a mutual agreement to end tenancy and you can sign a tenancy agreement. I just don't know if you can do, if there's any cases where you do them both at the same time that they'll hold. I think that will show its colors in the year ahead. But again, we're not property managers, so this is a property manager question. But I don't know. It's not as desirable to be a landlord as it used to be. It feels like there needs to be some legislation changes to get a little more power back to the landlord. Because the burden of protecting tenants is it discourages investment to be a landlord, and it creates shorter supply and it creates higher rents. Yeah. And with recent election results, I don't think anything's going to really change. Yeah. And I guess by recent election results, it's still uncertain at this point in time, but it doesn't look like conservatives are going to have a majority power. So I don't see anything significantly changing.
Yeah. The risk-reward equation doesn't really make sense at the moment. And it looked a lot better 5 years ago. It looked even better than that 8 years ago for investors purchasing these 1-bedroom condos. 1, on cash flow, but 2, on local governments and legislation and rights of tenants. So, I think it might be longer than that. I think the cash flow and the upside potential of capital gain needs to be a little bit more optimistic than it is today. And I even think it's going to be next spring.
Sorry, you think it's going to be like 2 springs from now? Is that what you're thinking? Yeah, you're probably right. Yeah. I'm a little optimistic. And when I say, I said they'll start showing up in summer. Sure. And by start, I mean that one person. Yeah.